It's time to have another conversation about the Brisbane market. Is Brisbane now an overpriced city, or are we primed for some long-term growth here in this market? We're going to be discussing how Brisbane has overtaken Melbourne as Australia's third most expensive capital city, but in my opinion, there's some real drivers and factors that put Brisbane as a frontrunner for growth over the next 10 years. So let's break it down all in this video. Sydney, Canberra and Melbourne have long been touted as Australia's most expensive cities when it comes to property. But after 3 years of a COVID-19 boom, Brisbane has climbed up the ranks. Since 2020, homes in the Queensland capital have increased by 50%, making it now the nation's third most expensive city with median dwelling price of $787,217. CoreLogic data shows that it's the first time in 15 years that dwellings in the Greater Brisbane region are more expensive than Melbourne's median price of $780,000. Now, it's always interesting to read these type of articles and look at these data sets because they're so macroeconomic. It's way too out there in terms of the pricing. They're looking at Brisbane as a whole, as an entire region, and Melbourne as an entire region. And as you would know, if you've looked into Melbourne, it's got a lot of urban sprawl and a lot of new developments and smaller dwellings way further out from the city, which would bring its median price point down. Whereas when you look at the Brisbane market, there's still a lot of infill to occur. We're still going to have a lot of density increase in Brisbane over the next 10 years. So they're in different cycles. And so to say that Brisbane is more expensive might make sense on paper at a dwelling value. But in reality, you've got to look at the individual property that you're buying, the suburb you're buying in, and how dense that area is. So let's take a look at some of this data and break it down in real time. So as you can see on screen here, we've got the median dwelling value in capital cities in December 2023. And Sydney's way out ahead at $1.1 million for the median home in Sydney. Then we're followed by Canberra at $843,000, Brisbane at $787,000, Melbourne $780,000, Adelaide $711,000, Perth $660,000, Hobart $650,000, and Darwin way down in the ranks at $496,000. So for me, Brisbane is relatively affordable, in particular compared to Sydney. Now, Melbourneites would like to argue that Melbourne's the biggest city in Australia, but really when it comes down to the dollars and the cents, Sydney is far more expensive to live in at this point in time. And I think Brisbane is primed for Sydney-like growth over the next 10 years. Sydney had some big booms in the early 2000s, and Brisbane has got the infrastructure, it's got the population growth, it's got the demand to increase over time. And that's exactly why I think Brisbane is primed for growth over the next 5, 7, and 10 years, especially with the cherry on top in the Olympic Games in 2032. So another interesting point is that Brisbane remains a seller's market. While December's median price for dwellings in Brisbane was more than Melbourne, the median house price was still cheaper in the Sunshine State at $875,000 compared to Victoria's capital of $948,000. According to CoreLogic, units were also cheaper in Brisbane with a median price of $561,000, while the median prices of units in Melbourne were $610,000. So this is going back to my point earlier. If you want to pull out different data sets, you can make your own assumptions on that data. But in this case, really, Brisbane is still relatively cheaper than Melbourne, Canberra, and Sydney, even though Brisbane's median price point is slightly higher than Melbourne's median price point, because it's such macroeconomic data. But all in all, Brisbane is still a more affordable city than Melbourne. And this graph really shows that because Melbourne has far more density, it's got 33% of units compared to Brisbane at 25%, and Brisbane dominating with houses at 74% compared to Melbourne's 66%. Looking at this product mix of property means that the price points differ. Obviously, townhouses and units are typically cheaper priced assets because they have less land value compared to houses which have stronger land value and typically command a higher price. So that's the big difference between Brisbane and Melbourne in this life cycle, is that Brisbane is a less dense city, and that's what I think is going to change over the next 10 years, which is why land is the scarce resource. Land is the thing that you can't change. You can build a different asset, you can add another story, you can knock down and try and build townhouses, but you can't change the parcel of land that you own. So really, if you can get a large block on 600, 700, 800, even 1,000 square meters in a established suburb, that's where I can see really good buying in Brisbane at this point in time. This is another interesting data point from CoreLogic, which looks at the median values in Melbourne and Brisbane in December and comparing different types of dwellings on their price point. So houses in Melbourne are generally around $948,000, whereas in Brisbane are $875,000. Units in Melbourne are $610K and Brisbane $560K. And that's where you can see the dwellings values below at $780 and $787, in particular due to that percentage of units in the Melbourne market. Now, that's the really interesting thing is some people are going, okay, well, Brisbane has less units. Maybe I should buy a unit or a townhouse. But for me, I always go back to the scarce resource, and we could see a supply of units come on the market over the next 5 to 10 years. If I was going to buy a unit, I'd be looking for a smaller block with lower overheads. So I don't want the swimming pools or the elevators or expensive costs in those strata fees. And I'd be looking for, say, a 1 in 8 or a 1 in 10 or a 1 in 16 at most if I was buying a townhouse or a unit. Generally, when we look to buy townhouses or units for clients, it's with some value add potential and higher cash flow. Those would be the two key criteria if you're looking at that type of asset. As compared to if you're looking to buy a house, for me, the fundamentals of buying a house here in the Brisbane market is, again, the scarce resource of land. So making sure location does the heavy lifting. And then we're looking at the dwelling. Can we add value to that through a minor cosmetic renovation or adding a granny flat or doing a subdivision down the track? And then also making sure the area has strong growth potential. Looking at the quantitative and the qualitative data. What can we see in the trend analysis for this suburb? What's happening around median prices for the properties, rental yields? What's happening in terms of the incomes, the days on market, the vacancy rates? What's happening in terms of the school zones and the infrastructure? In particular, the Olympic Games and the transport infrastructure that's happening here up in Brisbane. How are all these things going to affect that house here in the Brisbane market? It's important to consider all of these factors, and that's exactly what we do with clients when we're helping them make a purchase decision, is you need to analyze both the quantitative and the qualitative data at a suburb level and at a property specific level to make sure you don't end up buying a lemon and you buy a property that fits well within your current property portfolio. One property that suits one client is not always going to suit another client. So that's why it's so important that you need to buy the right property for you for the right price in the right location, which is exactly our slogan here at Purpose Property. And that's what we help people do here in Southeast Queensland. Another massive talking point for myself and clients at this point in time is what's going on with rental yields and what does my cash flow look like? You need to make sure you understand your cash flows. And so on screen, we have the median weekly rents for houses and units in December 2023. And in this case, this data is coming from Domain's 2023 rental report. In particular, I want to focus on the little disparity between houses and units in terms of rental price compared to their actual purchase price. So looking at Brisbane, you can see that houses on average rent for $600 and units rent for $560 per week. When you scroll back up and look at the dwelling values, in Brisbane, the data is saying $875K for a Brisbane average house and $560K for an average Brisbane unit. What this means on a yield basis is typically your gross yield for a unit could be between, say, 5.5% to 7%. Whereas in Brisbane at this point in time, using those values, you're going to be at a 3.5% to 4% gross yield on a house for a blue chip property here in Brisbane. So you need to weigh that up. Can I buy that house with a lower yield and stomach the negative cash flow and maybe some negative gearing benefits at this point in time with the view to balance my portfolio out over time? That's exactly what Emily and I have done throughout our investing journey. When we started building our property portfolio, we bought blue chip properties within the inner middle ring of Brisbane to build out our asset base. We also added value to those homes. So we did cosmetic renovations, got our hands dirty, sanded floors, got the spray gun out and painted the walls ourselves. And we really enjoyed adding value to the homes and then the reward at the end, which was pulling out the equity and being able to go again. And so you might want to start with some growth properties and build out your asset base and add some value to fast track your journey. And then looking at the rental yields that we're seeing for houses in the Brisbane market at this point in time, between 3 to 5% gross yield, you may want to pick up a few units in your property portfolio to balance out the cash flow. Or like Emily and I did, we ended up purchasing a unit block to again balance out our asset base. So we bought a unit block in Coffs Harbour for $1.4 million, and the gross rent on that property per week when fully tenanted is around $2,000 per week. So that's exactly how you can balance out your portfolio over time. Start with growth properties first, and then build up your property portfolio with some more cash flow properties, maybe add some granny flats, maybe pick up unit blocks or some units, and then find the balance to hold that larger asset base for a long period of time. Now, The crux of this video is Brisbane overpriced compared to some of the other major markets. I think Brisbane is still primed for growth. Looking at the data sets here, when you dive into the data, it tells a different story to the news headlines. And you can see that Brisbane is actually still more affordable than Melbourne, way more affordable than Sydney, more affordable than the Canberra market, and is primed for growth from a jobs, a population, and infrastructure perspective. You've got to take that into account that I am a Brisbane buyer's agent and I run a buyer's agency that services roughly a 35-kilometre ring around Brisbane. So I buy in Brisbane City Council, Moreton Bay, Redland City Council, parts of Ipswich, and parts of Logan City. So you've got to take all of those biases into account. But I'm putting my money where my mouth is. Emily and I hold $3.5 million worth of assets here in the Brisbane market. And we're currently spending around 5 to 600K on our major raise and build project here in Brisbane. And we're really excited to add value to that property and create a significant amount of equity through those renovations. So I'm very bullish on the Brisbane market over the next 3, 5, 10 years. If you're looking at the next 12 months, what a lot of the economists are saying is that Brisbane is projected to grow between 4 to 7%, very similar to the Perth market. And most of the other major capital cities are expected to have minimal growth in 2024. But it all remains to be seen what happens this year in 2024. I've always been a long-term fundamental investor. Again, I'm looking at what's happening in the short term, but I am more focused on the long term. How can I buy the properties I need to build out my asset base and then transition to more choices for myself and my family? So if you're interested in sitting down and having a chat with myself, you can book in a free strategy session at purposeproperty.com.au. We'll sit down, have a chat about your situation, talk through exactly what we do, and then leave some time for some questions. So head over to purposeproperty.com.au if you're interested in having a chat with myself. Otherwise, I can't thank you enough for supporting this channel. I'm really excited for 2024 and the content we're going to bring. So make sure you subscribe and stay tuned for more videos, and click this video over here if you're interested in more things on real estate, renovating, and financial freedom. I'll see you in the next one. Peace.